Hey, what is going on, guys? Welcome to another video, and today we are going to talk about what I believe are going to be the four main sports betting companies that are going to survive. So I know there are different people who are invested in different things. Some people like Draftkings, some people like FanDuel, some people like Penn National Gaming, and different things like that. And so many of you guys have been asking me what my thoughts are on all the different sports betting companies. And so I'm just going to go ahead and in this video break down the main four that I like and just kind of talk about each one and which ones that I like the best. Hint, hint, DraftKings. But let's just go ahead and get right into this video. I personally think that the sports betting industry is going to be bigger than all the estimates out there. There are some insane estimates of billions and billions and hundreds of billions of dollars that the sports betting industry is going to bring in the future. But I think those numbers are going to be even higher than that. The reason why is because I just think that I know for a fact there are a lot of people in the illegal sports betting market in states where sports betting isn't legal. You know, you've got a bunch of different apps like Bovada and things like that that are very popular. These overseas apps that a lot of Americans who live in states that haven't quite legalized sports betting yet use. And so once more states start to legalize sports betting, I think we're going to start to see the playing field of sports betting companies shrink. And I think there's really only going to be about three or four that are going to survive. That is my honest and true opinion. So now let's just go ahead and get right into it. So the first thing I want to go over, and if you're heavily invested in sports betting companies, you're definitely going to want to follow this guy named Ryan Butler. Ryan Butler is great. He covers everything regarding sports betting revenue and the news coming out and each company and everything. He's great. So this is definitely somebody you're going to want to follow. I follow him and he helps me keep track of how the sports betting industry is doing. So what I want to talk about now is Ryan Butler. There's two tweets here. So you got this Roundhill Investments tweet. So let's look at this first. One thing I like about this list right here is this list is perfect because in my opinion, these are the four companies that are going to survive. I'm being so honest. I think the top two is FanDuel and DraftKings. I think those are the number one top two that are 100% going to survive. And then I think the next two behind them would be Caesars and BetMGM. And most of you guys know I am invested in MGM as well. So now let me just go over to Ryan Butler's tweet. So Ryan Butler said, mobile sports betting week ending in 3/20, March 20th, handle to revenue ratio. So for those who don't know, sports betting handle is simply just the amount of money and wagers that are accepted over like a certain period of time. So let's say the last 3 months, they would say this was their handle within this amount of time, within the last 3 months, just as an example. So what they're saying here is for the sports betting week ending in March 20th, for that week, this is the handle compared to the revenue that the company actually received. And so the left side is the handle. The left side is how much money they got from wagers, which means, yes, all these crazy people spent this much money on sports betting. You can see right here with FanDuel, $168 million people spent just with that company alone on sports betting. DraftKings, $110 million, Caesars, $67, BetMGM, $43. Yes, I'm telling you guys, sports betting is insane. People will really spend some serious money to bet on sports games. It's crazy, but hey, I love it. They love it. We all love it. They spend their money. We make money, hopefully. So the right side is their revenue. So one thing I did notice that I didn't like, FanDuel is just absolutely killing it. When you look at the percentage, FanDuel earned about 8% revenue out of that sports handle. And there's a reason why, because you guys got to keep in mind, New York is one of the most heavily taxed states when it comes to this stuff. So I'm sure most of that money went straight to the state government and just taxes alone. But I'm sure the other part of it, because all of these companies just launched in New York within the last few months. So I'm sure a lot of the money that they probably got probably went to marketing and things like that too. But we really won't know until some type of article comes out about it or the company speaks on it or we see the next earnings report. That's the only way we'll really know. But one thing I did not like, you guys know I love DraftKings. One thing I did not like is DraftKings only earned about 3%. And I have no idea why that is. You look here, in the terms of their handle, they got $110 million from the people who wagered, but they only made $3.3 million off of that. That's only about 3%. FanDuel on the other hand, made 8%. FanDuel brought in $168 million and brought in $14 million in their handle. So that's very, very nice. We're going to look at the other two companies just because, in my opinion, these are the winners. Caesars is definitely a winner. They brought in about 7%. And then BetMGM, they brought in about 3%. Now, I just want to say this. I am not specifically invested in BetMGM because of their online mobile sports betting app, because DraftKings and FanDuel absolutely murder them, to be completely honest. But MGM, what MGM has going for them is they're in China. They've got a crap ton of casinos, and they've got the physical structures that DraftKings doesn't necessarily have. So that's why I chose BetMGM as my other sports betting play besides DraftKings. But let's go ahead and actually move on to some other things. Okay, so let's go ahead and look at some financials here. So these are the financials for DraftKings. This is the earnings from their latest quarter. So this will be their income statement. So I went over this before, but another recap. Revenue came in at $473 million. Definitely not bad. But what always gets this company, what people can't stand, I don't mind it so much, but what people can't stand is this right here, that cost of revenue. So you're bringing in $473 million of revenue, but then cost of revenue came down to $253 million. Then you look at sales and marketing, $278 million, general administrative, blah, blah, blah. So they're just losing a crap ton of money, and that's what's really shaking investors with this company. But I'll get into later a little bit why I still love DraftKings, and I'll kind of show you guys. The other thing that people really can't stand about this company is this right here, that's stock-based compensation. People have been grilling the CEO for that, and they're not really happy about that either. So as you can see, stock-based compensation came in at $184 million. And I actually agree. As a shareholder, I don't think these people need to be like, I don't know if you guys saw the Coinbase CEO. They were getting so much money, I think, in stock-based compensation. I could be wrong, but I think I'm right. They got so much money. They do bought like a $30 million house or something insane. It's just like, you know, you can be rich and live a good life, but if you're not if the revenue justifies it, fine. But if it's not, you don't need that much money. You know, grow the company first, get the company to a point where they're bringing in an insane amount of free cash flow. Then you can, you know, get your stock-based compensation, kind of like what Apple does, you know, kind of like that, in my opinion. That's just my opinion. So that's what's going on with DraftKings. Scroll over to BetMGM. I have to find this because remember, BetMGM is kind of separate. It's a part of MGM, but it's a little separate. MGM International Resorts is like the whole big company. BetMGM is like a segment of it. So we look at BetMGM, just their sports betting app alone, their sports betting operations came in at $267 million in Q4 2021. MGM Resorts, 50% share of BetMGM's operating loss was $57 million in Q4 2021. So definitely not as bad as DraftKings. We get it, but like I said, I'll explain to you guys why I still love DraftKings over all these other people. Corporate expense, $117 million, including approximately $8 million in transaction costs. Blah blah blah. Capital expenditures, Q4 2021 US $151 million, China, blah blah blah. So you guys get the overall point. Now let me go to BetMGM. Let me go to MGM as a whole, because that's really what I'm investing in this company for. Yes, I do like their sports betting app. I think it's nice. I've downloaded the app. They just launched in Illinois. I did download the app. I liked it. It was cool, blah, blah, blah. But this is really the meat and potatoes of why I'm investing in DraftKings. This is the main reason. So we go right here. Las Vegas resorts and regional operations adjusted. Property. Actually, no, that's not what I'm looking for. I'm sorry. They repurchased 1.75 billion shares of common stock. I love companies that do this. You guys know I'm investing in Alibaba. Alibaba does the same thing. It's hard to see it manifest in the short run, but I'm telling you, in the long term, that does really good for shareholders. You definitely are going to want companies that are buying back their own shares. You're definitely going to like that. That is really, really nice. BetMGM does pay a dividend as well. This company's bringing in such a crap ton of money that they do pay dividends to shareholders. I don't really care about dividends, to be honest, at all, because you get taxed on it. I just care about the growth. So the dividend is just that extra added bonus, which is cool, but I care about the growth, and that's what I expect from this company. We scroll down. Consolidated results. This company brought in net revenues of $3.1 billion, which included a full quarter of operating results from Aria and Vidara. Hope I said that right. And we scroll down here, Las Vegas Strip Resorts. I'm sure you guys know BetMGM. I'm sure you guys know MGM, right? If you've ever been to Vegas. Now, I've never been to Vegas, but I've heard of it because everybody who went to Vegas told me about it. And also, I just follow the company, so I did my research, and I know that they operate in Vegas. But, yeah, they've got a bunch of physical structures in Vegas, and it brings them a crap ton of money. Let's scroll down here. Regional operations net revenue came in at $900 million, increase of 51% compared to the prior year and flat compared to the fourth quarter of 2019. We know why. I'm not surprised by that. The pandemic significantly impacted this company. And part of the reason why I'm invested in MGM is also similar to why I'm invested in Disney. I think the pandemic's over. And I think now that the pandemic's over, things are going to do very well. I think people are very eager to get outside and spend money and enjoy their life. I know I am. So I know I'm not the only one who's thinking that, but I can't wait till it starts to get warm here in Chicago and, things start to get better. And it's kind of what I'm looking at here. Now, they are in China, which is really cool. I know everybody has the old FUD thing going on with China, but when you discount all of that, China is a cash cow. It's got a whole bunch of people there that are willing to spend that money. So net revenues in China came in at $315 million, increase of 3% prior to the year quarter, and a decrease of 57% compared to the fourth quarter 2019. That is terrible. But I still like this company, though. So I just want to go over that for you guys, just so you guys can kind of get an idea. Now, here we go. Let's get to why I love DraftKings more than every company. Okay, here we go. We're going to make it very simple. So this Benzinga article says here, DraftKings FanDuel distancing themselves from the competition in online sports betting. Yes, they are. This is why I love DraftKings so much, because like I told you guys, I think DraftKings and FanDuel are growing at an enormous rate. And I think that DraftKings and FanDuel are just better. They're just better companies. They bring in more money. They're the better apps. These are the main two apps that sports bettors use. It just is what it is. So let's scroll down. Let's let the numbers do the talking. Here we go. DraftKings Inc. was the market leader in OSB, online sportsbook, in the top 5 states in February, accounting for 30% of the total GGR, which stands for gross gaming revenue. DraftKings gained an 8% gross gaming revenue market share in the month. Let me read that again. DraftKings was the market share leader in the top 5 states in February, accounting for 30% of the entire gross gaming revenue. So when people say, why you like DraftKings? Oh, they're horrible, losing all this money, blah, blah, blah. This is why I love DraftKings. They are killing everybody. You can say what you want. People use the dang app, and that's all that matters. FanDuel is another one. DraftKings is doing better than FanDuel, but FanDuel is up there. FanDuel was a close second in those 5 states with a 28% market share. DraftKings and FanDuel accounted for a combined 60% of February's total digital gaming handle, excluding New Jersey. Boom. Drop the mic. I'll drop the mic right there. You guys want to know why I like DraftKings so much? That's why. Now, I know some people might say, why don't you invest in FanDuel? FanDuel's fine, but I just don't like the whole parent company thing. I don't want to invest in their parent company. I don't like Flutter Entertainment as much as I like FanDuel by itself. So I would rather buy DraftKings. And also, I think DraftKings is still better than FanDuel, in my personal opinion, just by a little bit. But I do think that both of them will hang around. But if you just ask me why not FanDuel, it's very simple. I like DraftKings better. I think DraftKings is the better investment. It's really that simple. Now, if you're saying, why don't you buy something that has a bunch of structures and a lot going for it besides just the online thing, that's what MGM is for, right here. By the way, while we're on the subject of MGM Resorts had the 3rd highest market share at 13% or 1% compared to January. And then Caesars is up here on the list too. Some people might ask about Penn National Gaming. Fine, let me give my thoughts on Penn National Gaming. Not a fan of them at all. I get they got the whole Barstool Sports things. Congratulations for you. The whole company's just a headache. They're affiliated with Dave Portnoy. He's a basket case. He causes too many problems. Every time you look up, he's got some kind of controversy. That's not good for the company. Also, in terms of numbers, these 4 companies up here are absolutely destroying Penn National Gaming. So for me, Penn National Gaming is just not something that I really care to invest in. It's just not for me. But now we look at Benzinga's take. Benzinga's take is actually what everybody's take is if you just pay attention to what's going on in the sports betting market. DraftKings and FanDuel are the 2 clear national market share leaders in handle, sportsbook handle, online sportsbook handle, while MGM is the leader in national iGaming share at 28%. Oh, look, 2 of the 3 companies mentioned here I'm invested in. You see what I'm saying? In the past 3 months, Flutter shares are down 17%. Okay, yeah, we don't care about that. But yeah, so there you have it. That's honestly my thoughts on everything. The reason why I like DraftKings over everybody is because I just think that DraftKings is the leader. They're just crushing it. They really are. I get it. They're spending a crap ton of money on marketing, blah, blah, blah. But at least the money they're spending on marketing is working out for them. The fact that they were the market share leader in the top 5 states in February. I mean, clearly the money's being spent well if they're doing that. And like I said, only about 38% of all states have legalized sports betting. So imagine what companies like Draftkings and FanDuel are going to do when that number goes from 38% of states that are legalized to 55% to 63%. You see what I'm saying? Like stuff like that. So that's what I'm keeping in mind. I recognize DraftKings is a very risky investment. Yes, it is. MGM is a little bit safer. If you want to go with the safer bet, MGM is actually probably safer because they've got those physical structures. But for me, I like MGM and I like DraftKings. I know DraftKings balance sheet does not look the best. Financials do not look that great, but holy cow, this company is bringing in some money and they are growing at a fast rate. And that's why I like DraftKings. That's why I'm investing in that company. That's why I like MGM. And those are my thoughts regarding all three of these sports betting companies. So hopefully you guys had a good experience watching this video. Hopefully the video helped. I would have went into Caesars and FanDuel's financials too, but the video is already super duper long, so sorry about that. I would rather go over the two companies that I'm actually invested in so you guys can kind of get an idea of why. And so there you have it. That will go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.